some of the questions based on the PowerPoint, the presentations that, not the PowerPoint, the PDF that I'd sent earlier in the group. If someone could post them to the chat, kindly assist me, as I can't access WhatsApp on my laptop. Then people can just also get them from there. Then we can move at everyone's pace. Now, we'll start with the bank reconciliation. So just give me a moment to re-download that. Then I think maybe how we can do this, we'll just be going through them. Then I think it's easier if maybe you just like interrupt me as we go through it. So basically what we'll be doing is we will go through the presentation, then basically the notes, and just to try explain a few things, but with a focus on the numbers, and just feel free to interrupt. Then we can then look at it. I hope you can hear me, and I hope it's clear.
Hi, Wendy. Yeah, we can hear you. We can see your screen.
Okay, thank you. So, yeah, so we can then start. Okay, I don't know what's happening here. So we can then start on bank reconciliation. So can you hear me?
Yeah, can you zoom, please?
Is that any better? Is it possible for someone to also just share this on Teams so that the guys were not able to see, or the guys want to like refer back and also look at it? Okay. So in terms of statement, so basically the whole idea of this is you have your bank statement. In short, is just really to do the reconciliation, to make the numbers tie, and sometimes the numbers don't tie, i.e. the things that you've recorded in your books will not be the same as the number that you have recorded that is in your bank statement. So a bank reconciliation is then to help the company really figure out, or an individual, but mostly companies, figure out issue with the bank statement, or the variances in the amounts can be explained. So it's just a way of explaining the differences. Now, then, in order to do that, then we need to then understand basically why then the numbers would not be the same. Excuse me. So one of the reasons why the numbers would not be the same is because many organizations and even some individuals, you'll find that you've given someone a check, or they've given you a check, and either this check hasn't been deposited in the bank, or the person who has it hasn't like deposited it, or on your or uncredited. So basically it means that the money is in somewhere and it hasn't reached the bank, or it hasn't been cleared. If you remember from like commercial law class, sometimes it takes like a number of days before that the whole process of moving from one bank to the other is completed. And for that reason, the numbers could be different. So maybe like you gave someone a check, but it hasn't reflected in their bank. Or someone gave you a check and you either haven't taken it to the bank, or it hasn't reflected, or it's even been dishonored by the bank. So on your side, you might think that you have paid someone, or you have been paid, but then as at your cash book, but in the actual bank statement, then that's not the case. Then the last reason why this could happen is sometimes you make errors in terms of the numbers. So you write down like the wrong numbers, or sometimes even so it's the overpayment, underpayment, then that might also bring in some issues. Then now, in order to look at this, there are two ways of then correcting the differences. So normally the biggest trick, and I think for exams, the biggest trick would be to know what do you correct in your cash book, and what do you correct when do you do the bank reconciliation. So I'll just go ahead, then I'll come back So worry not, we will be back. So so in terms of, if we look at, I'll just go a bit ahead to show you the difference. So if you want to correct like the cash book and reconcile it to the bank statement, you have to do it in 2 steps. One, you first have to update your cash book. Then after that, you do your reconciliation. So with any question, then you need to look at the 2 steps. What do you need to correct under the cash book? And what do you need to correct under the bank reconciliation? So mostly, generally, as a general idea, you want to put in your cash book, you want to correct most errors in your cash book under the updated cash book. Because ideally, if these errors were not there, then your cash book would tie to your bank reconciliation, to your bank statement. Once you correct the errors, you also want to include what is not in the cash book. And this ideally would be like, if you deposit money, sometimes it's like interest for some accounts, for most accounts. So you might want to put the interest that you had missed out. There will be bank charges. You might also want to include those ones. Then there will be standing orders. Standing orders are basically, so some people like automate you say every month I want money to be paid to, I don't know, Kestel or your rent or whichever other place, but every month there's like a standing order. This will not be picked in your cash book because it hasn't been recognized. So the goal is really to correct anything you can correct under the cash book, in the cash book, before you can move to the bank reconciliation. So that is the whole essence of like everything cash book and bank reconciliation. So always ask yourself, is it something I need to correct at the cash book level, or is it a bank reconciliation level? Most of the time, if you're looking at like bank reconciliation, it's really mainly to do with checks, like things that are in transit, things that are in between. Have I received a check that I should have received? Has it been credited? Has it been uncredited, or is it, so that is how you look at it. So I don't know, maybe I can just pause there. I'll be pausing for like all these things. Then maybe if there's a question, I can take it. Then we'll move on to the actual and look at like how some of the questions would be like. Is there a question? Okay, I'm assuming then I can't see like people. So if you have a question, just like speak out. I won't be able to see my screen as I present, so just speak out if you have a question. Then now with that, so the terms then you will need to know is unpresented checks and uncredited checks. Now you need to, even if you don't know, just think of it in terms of yes, people. So money in and money out. So if we look at unpresented checks, these are checks that you have given, but they haven't been presented to the bank by whoever you've given them to. Then uncredited checks, these are checks that you have received, but either you haven't or they haven't been cleared by the bank and credited into your account. So those are the key things to then look at. So I think at this point, what you can do is then just look at like 1 or 2 questions and move on to the next topic. So now like here, let me see, I think we can do this one. So I'm looking at page 5, the question on page 5. So here we have John Kahiga, who is a sole trader, and we have the monthly statement. This is your normal statement. Then we have the debits and the credits. So so we'll just look at the balance. So the balance here, the opening balance as at December 1st was 186. Then it shows what has been removed and what has been added. So basically, from a bank statement side, what will be like your credit is what has been added. Then what is a debit will be what has been subtracted, because remember, when you're looking at your bank statement, it's from the bank's perspective. So for that reason, anything added will be a credit, anything removed will be a debit. Then if you look at it at the end of the month, the last number we have is 155. So basically, in short, at the end of the month, we had 155. Then we have the cash book that has recorded a number of transactions. And here, what we have really is, so they have recorded the debit and the credit side. But basically what we're seeing is, if we look at the balance carried down is 179. So the balance carried down will be the balance you start with in the new month. So we started at 186, which was more or less what we also started with at the bank. But we are saying we have 179 and we are also seeing the bank has 155. So there's an issue. So we need what the issue is. So the first part before we go to the bank balance reconciliation statement. Now, if we look at the cash book, because it's in your books, cash is a debit account because it's an asset. So normally what you have as balance carried down, it will also be balance brought down. And because you're going to correct a few things, you're going to start with like a balance brought down of 179,300. I hope it's all clear up to now. Just feel free to stop me. So we then need to go into all these and figure out what's not there. And one way of doing this will be to look at, so the easiest way, so the questions are in different formats. So we look at, but if we look at these, basically what you'll be doing is you'll be looking at these as you check. So like for instance, let's check, do we have this check for 17,864, which is electricity, and we can see that it is here. So apart from checking that it's there, the other thing we'd want to check is whether the amount is the same, 24,300, 24,300. So that is okay. Then we go to the dividend. The dividend, ideally, most of the time, if you see anything like standing order, bank charges, income, dividend, most likely it would be there. So, but we can check still, so it's not there. So we know that is one of the things that we need to adjust for, and therefore the dividend would come here. Now it will come on this side if it's a dividend that we've been paid. So how do we know that it's a dividend that we've been paid? Because it's on the credit side of your bank statement. So it's one of the adjustments that we are making here. So we will see dividend over there, 2,600. Then we move to the next one, which is local check deposit. And this deposit is by Solomon. It's 21,200. And we can see it here, so we don't need to correct it. Then the next one is a check by Nyambura, which is a payment out. So basically, is it on the right side? Yes, it's 17,400. Then we look at another check, which is also going out of 1,700 by Young Traders. It's here, so we don't need to correct it. Then we look at miscellaneous credit by Kevin, which is also going out. Now, if I check here, just a sec, Kevin Kagai, so miscellaneous credit. So basically, a miscellaneous credit is 18.5. It's already here, so we don't need to. It's okay. Let me see if I can click here. So it's already there, so we don't need to do anything about it. Then we move to the standing order. Standing order, most of the time, so again, it's one of those that you're likely to correct in your cash book. So most of the time it won't be there. So we will have a standing order, and a standing order is basically an instruction to send money out of your account to another account or to a person every month. So it will reduce your bank balance. Therefore, it's on the opposite side. So that is why it's here. So it's one of the other adjustments that we have made. Then we go to the check by Janet Aoko, that is 3,700, and that is sorry, that will be a debit on the bank side, meaning it's supposed to be a credit on this side. So just check the amount, it's okay. Then we go to Daniel Korir, 11,800. It's on this side, so we check it's here, the amount is. So basically when you're checking, check that it has to be on the opposite side of the bank statement, but you also need to check that the amounts are correct, because some of the errors are normally like not like they're not like they're more of like casting errors. So for that reason, then you have to like also look at that. Then now the next one is now David. If we look at David, we can see that David, it's a debit, so it will come on this side, and it's 9.5, it's 9.5, it's okay. So the whole process goes on like that. So I'll just move to the next thing that we need to look at, which is bank charges. Bank charges will not be there, so it is included. Then direct debit, if we look at direct, so as you go down this line, you will come across direct debit, and you just literally check it through the cash book. And we can see that we didn't record direct debit anywhere. It's a debit, so it's supposed to be a credit this side. So for that reason, it will appear here. Then what you do, once you have identified all of them, and assuming now we have identified all of them under the cash book, and the only thing we leave out is unpresented. So the only thing that we don't correct at the cash book level is the checks, whether it's unpresented checks by us or uncredited checks into our account. So you first need to now balance your cash book and know what amount you're working with. How do you do that? You simply add the totals. Then they will never balance. So like this side will be 181 and this other side will be that is 10.6, 10.6, 8. That will be like 13.6. So you'll have 181 and 13.6. Then whatever is floating, whatever is not adding up, you balance it thereby a balance carried down, which will be 168, 100. So that is what will come to be your updated balance as per cash book. So maybe I can just stop there a bit in case anyone needs something clarified. Okay, so we can move on then to the next part. Now, now you have your correct cash book and you still have your bank statement and they are still not balancing because the balance as per bank is 155, your balance is 168. It means that there's still an issue. So now how do you start? There are two ways, and allow me to just now go back to the two ways of reconciling this so that you just see both options and you can choose whichever works for you. I like starting with the cash book, but there are really two formats. So basically you want the two numbers to balance. So you can either start with your balance as at bank, or you can, okay, so format one is balance as per the cash book, which is now the 168. Then you add and subtract, or you can decide I'm not going to start with the cash book, I'm going to start with the bank statement. All of them are okay as long as you follow the right principle. So what is the right principle? If we say start with the cash book, you're saying my book has 168. So what haven't I left? What have I left out? Maybe I haven't put unpresented. I haven't put unpresented checks. And what are unpresented checks? We saw that unpresented checks, if we go back to, which page was that? If we go back to unpresented checks, these are checks issued by the firm to like creditors and other people. Basically, it's a check you've given out but hasn't been presented to the bank. Uncredited deposits are checks that you have received but haven't been credited to your account. Just think the bank should credit your account. So uncredited means it's come from you. It's been given to you but not yet put there. So what do you then want to do? If you're starting with the cash book, you want to add unpresented checks because they haven't been given out. But remember, for you, you know that I have paid so and so, so you have recorded it. But if the bank hasn't recorded it, the only way it will balance is if you add it back. Then you have to remove uncredited deposits because you know someone give you a check, you recorded it in the cash book, and now you have it as additional money in your cash book, but in the real sense in the bank it's not there, so you have to remove it. So basically you can start with the cash book and undo what hasn't been done by the bank. And I think this is much easier in my opinion because it's easier to remove what is not in the bank than to add back. But there are two formats. So now let's look at this. I prefer that one, but let's look at the second one. The second one, you start with your bank statement. And now you have your updated number as per the cash book after making those corrections. Then you say, I'm going to add uncredited bank deposits, which basically is these are monies that have been paid but the bank hasn't recognized. Then I'm also going to add errors on the bank statement. Now errors could be like what could errors be? Let's see what errors. But I think errors would be something like the casting errors, which basically are like maybe someone deposited in your account, but then you didn't see it, or money from someone else's account was deposited into account, or money was to go to your account, but then it was moved to like someone else. So we will see a question where we will look at how to then correct those errors. Then you get to the number. So before we go back to the question, I hope it's clear. Is it? Okay, I'm really hoping it is, but let's go back to our question of 168. So we were at 168, which we have here. So what are we correcting? So we go back here and you check. So every time, I think maybe an easy way of doing this in an exam situation is to just like figure out if you see a deposit, just could have done then was like note number 5, note number 20, so that when you see like a check 27, then so that you don't have to like them again. So, and you'll also know when they balance. So now looking at this, the first one we need to deal with is a local check deposit of, let us see. No, this check we need is Victor Karanja. Let's just see where Victor Karanja is. Okay, I'm not able to see this Victor Karanja here. Okay, I think we'll then miss something. No, I'm not missing something, but then I can't see that here. So we'll handle it. I think the next question we'll do even has like better example in terms of the errors and the credited and uncredited and unpresented checks. So with the principle, we can then move on to this question again and look at it. So let's start by, let's see. So this is the one we've just done. So let's start by this example. So we're only gonna do one more example, then we move on to the next one. So I don't know, is it making sense so far? Hello, someone say something. I hope it is it? Hello?
Yes,
it is.
it's
Okay, just of course still feel free to yes. Yeah, so now here we have Mwambi, a sole trader, and we have the bank statement of June 2001. It was showing 706, whereas the cash book was showing 2.3. Now, then we have like a whole list of things to then adjust based on that. So we are going to start with the cash book. And remember, the cash book is a debit account. It's an asset. So the balance of 2.3 is going to sit on the debit side. So you just call it updated or adjusted, but I think the correct word is adjusted cash book. So we start with the 2.3. Then in exam situations, in exam situations, if you want to like simplify your work, you can just like do the thousands and work with smaller numbers. I think especially if you tend to get confused with the numbers, I'm one of those people, so that really works for me. So now let's start. So we're starting with the 2.3, then we go to note number 1, where it says bank charges of 3,000 had not been entered in the cash book. So what does a bank charge do? It reduces your money in the bank, so it will come to the opposite side, which is 3,000. Then we go to number 2, check drawn by Mwambi totaling to 22,500 has not been presented to the bank. So then also these words can guide you. So that is an unpresented check, or just know your check is a present to the client. So so you can always think of it that way if the whole credit present thing is confusing you. So that one will just put a mark there. I can't put a mark now because it's PDF, but ideally you can like put a mark with your pencil or pen, and now know that that is one of the issues that you're going to handle at the next stage. Then he had not entered receipts of 26,500 in the cash book. So that one is not a check issue. So that is just an error in the cash book. So we are going to add it. So basically he had understated his cash book by 26,500. So we are going to add it over there. Then we go to the next one. The bank had not credited. So if the bank had not credited, it's uncredited. So we put it aside for now. Then the next one is standing order payment of 62. So we know a standing order is also a payment out. So it comes over there like at 62K. So it's gonna reduce the amount. Then here we have in the cash book, Mwambi had entered a payment of 74,900 as 79,400. So there's an issue there where we have a big number. So basically what had happened here, so you want to know whether the number was more or less. So we put it as 79 as a payment instead of 74. So it means that we overstated. So if we overstated by how much? So basically what you do 79,400 minus okay. Hey, did you guys lose me? Hello.
Yes, we did,
Yes, you're muted.
but you're back now.
Yes. So so let me. I was at overcast. I hope you had me up to that point. So basically, when you're looking at an error, first ask yourself: is it reducing, or is it did it reduce the money, or did it increase the money? So in our case, if you paid someone more, it means that you reduced correct it, you have to bring it here as an overcast. If it was a reverse, so say if you were supposed to pay 79 but then you paid 74, then the difference would then come on the credit side. So that is now how you deal with it. Once you know that it is an error, just ask yourself, what has it done? And think of it as like cash money in your pocket. Then you will then know how to deal with it. Then a check for 15K from a debtor has been returned, and it's called refer to drawer. So when a check has been returned, it's like a dishonored check. It's basically the bank hasn't accepted it. So anything that leads you to like a return check, and this is different from unpresented and uncredited. This one, the bank has looked at it and decided that maybe you don't have money, or the check is past 6 months, therefore not valid, or whatever other reason. So that one, if it's been returned, so first you need to check where the check came from. So it's from a debtor. So basically it's money we had in the bank, but the bank is now saying we don't have that money. Remember, in our cash book, we got the check and we recorded it. So what do we need to do? We need to remove it. It's highly unlikely that you'll have a dishonored check in your name, especially if your bank account has money. So most of the time, you need to check whether the check is, most of the time it will be a dishonored check from the debtor side. And the debtor is someone who's supposed to pay you, therefore add money into your account. So if it's not, if the bank hasn't recognized it, then you have to remove it from your cash book by crediting it. Then the last one is on, oh, that's not the last one, 3 more. Mwambi had brought forward an opening balance of 329 as a debit instead of a credit. Okay, so what do we do with this? So if something is supposed to be a debit instead of a credit, then you have to remove it. First, the first thing, to remove a debit, you have to credit. But remember, it's not just undoing it, it's also doing the correct thing. So if it's easier for you, you can first credit the 329 and then you can first credit the 329 and then redo it by putting it as a credit, because now if you have an equal amount of a debit and a credit, then it's 0, but you are supposed to have a credit amount of 329. Another way of doing it is doubling it, but if you need to do it step by step, it's okay. So what has been done in this case is 329 times 2 in order to now put it in the correct position. Then number 9, an old check amounting to 44K had been written back in the cash book, but the bank had already honored it. So basically, we had this check that we didn't think was going to materialize, and it materialized, but we removed it, but the bank is now saying it's okay. So now, what does it do? Then it's a payment. You also need to check, is it a check that was supposed to add money to you or reduce money from you? So here the check is, it's a payment. So what does a payment do? It reduces amount, so it's a credit. But then we'd written it off thinking it was never deposited, probably should another check or whatever reason. But now in order to then correct that, we have to now remove it because the bank has now honored it and paid it. So it's going to be there. Then the last one here is some of Mwambi's customers had agreed to settle their debts by paying directly into his bank account. Unfortunately, the bank had credited some deposits amounting to 832,500 to another customer. However, acting on information from his customers, Mwambi had actually entered the expected receipts from the debtors in his cash book. So basically, you don't have this money in the bank and you're supposed to follow up with the bank. You need to then remove it from your book, and that is 832. Now the interesting thing, now if we look at this, it's a sec. Oh, give me a sec again. Still the same question. And if you note, like this, we can see this error now in the bank reconciliation, and it's as if, as much as it's a direct transfer, it's like it's gonna be corrected, but you treat it like an uncredited check as much as it's like a direct payment into the account. Because and I think how I think about it is, if it has anything to do with the bank, do it in the bank reconciliation. If it has anything to do with your internal affairs, adjust for it here. So ideally, that is why then we'd explain why it's going the other way, and yet it's not a check. Because remember, initially I'd said only reserve the bank reconciliation for checks, but a direct deposit should have the same effect. If you see anything like RTGS or direct transfer, wire transfer, direct deposit, all of it still has to do with the bank, and therefore it's going to be here. Now, once you're done with that, so now we have, you then balance it. Then whatever the balance is your updated balance. And this is like 1.6. So we start with 1.6. Then we go back to our list. And now we look at the 3 issues that we had marked out, which is number 2, which is checks presented to the bank. And we also had, number, okay, I'll find it just now. I wasn't marking them. Let me go back to this and I'll find it. So we also have 98 and 22. Okay, I can find them. So the bank had not credited, so that would be uncredited. Then we also had the 22 that hadn't yet been presented to the bank. So now we start with our balances per cash book, which is now the updated 1.6, and unpresented checks basically is checks that customers haven't presented to the bank. So if the bank hasn't recognized it, we also don't recognize it, so we add it back. Then uncredited check, we have that error that was amounting to 832, but we also have the uncredited check of 98, and that is how then it balances. Now, of key importance is, you are right when these numbers balance. So sometimes when it doesn't balance, check your numbers again, check your addition. But I think it's also like a point form. So you'd rather not even waste a lot of time balancing it if you have tried your best and it's not working. But the moment it's balancing, then you know your numbers work. You can also, to make your work easier, you can also like add them in stages. That way it's easy to figure out where, like you see, like over here, unpresented checks have been added together and credited checks have been added together. That way, if it's not balancing and you have time and you need to like correct your work, then it's easy to really figure out where your error is, because maybe you'll first start by re-adding these numbers and checking these, then checking. But if you just list them, then sometimes it's like really hard. Then you can also like come add this together, so that you like doing it in stages, and that will like help you in terms of just the exam. So that's it on bank reconciliations. I don't know if there's any question before we move to part 2. Is there? I'm assuming there is no question, and therefore I will move to the next part. And the next part is, it will be a series of like really like many questions.
Okay, hello.
Yes. I don't know
Okay,
which
on
is
that,
back. Go ahead.
it's
Yes.
Kevin. It's Kevin.
Yes.
On the part of the bank balance or the cash book that is required, sometimes
Yeah.
they don't tell you the amount. Either on the bank, they just give you a question and you have to identify. So how are you going to know that your answer is correct?
So you're gonna, okay, so the reason, okay, so there's one thing that is not going to change, which is the bank statement. And remember, that is also why I prefer starting with the cash book, because the cash book is your own creation. So if you're able to balance it and it goes back to the bank statement, then you'll know that your answer is correct, because the bank statement will not change. And that is why I like starting with the cash book. So once you correct everything, you will always have a number to start with at the bank statement level. If you're not given, just check the last number there. It will always be the last number. Think of it as like your normal bank statement, then that last number will always be your bank statement. Then if you start with the cash book and you end up at that number, then you'll know you're right, or your workings are correct. Okay. I hope that answers your question.
Excuse me, can you hear me?
Yes, I can.
I didn't quite get your explanation on the question we just did. Your explanation on number 8. I don't understand why we doubled the amount. Please just explain it again.
Okay. Let me get back to it. Number 8. Number 8. Okay, number 8, 329. So now, yes, I can explain it again. So basically the principle being, okay, principle is like such a big word, but basically the concept being tested here is, if you're supposed to put something as a debit, but you put it as a credit, how do you correct it? You need to then put it as a credit. Oh, okay, hope that is not my network. Oh, it's not my network. Okay, so if you're supposed to put and you put it as a credit, then you need to do the right thing But now if you have a debit of 329 and you now move it to be a credit of 329, the net effect is 0. So in order to put it the correct way, you have to first reverse what you've done, then do the same thing. So in essence, it will be double. I don't know if that answers your question. Because if you do it once, then it's like that transaction didn't happen, and it's like it's a 0, nothing happened. So you have to undo it, then do the right thing. Does that make sense?
Yeah,
Alco,
it does.
has your
It does.
question been answered?
Yes, thank
Okay.
you.
Okay. Okay, so I think then I can move on to a question. I think I move on to this other one. So this one we're gonna do it in. It's just like a series of questions. So I'm just gonna do it in really in bits. And this one I might even have to now do it in Excel because I think we might need to calculate a bit more. But let us start here. So I just need to explain a few concepts. I hope you can still see my screen, but I just need to explain a few concepts just as you read, but I'll focus on the numbers. So this is like on cost accounting and budgeting. So if you look at accounting, there are like various types of accounting. There's financial accounting, and everything we've been taught, a lot of what we've been taught and we've been working on is on financial accounting. Basically, how much have you spent and what is your position right now? That is all financial accounting. But now when you go to management accounting, sometimes, so think of it like, just like, let's use, know that I spent, I don't know, 1,000 shillings, just for instance. But it's another to really know. You want to ask yourself, what is the cost of, I don't know, of food in my house? What is the cost of maybe the person who cleans, which basically it's not more of the expenses, but it's more, how do you then classify your costs? Can you really have unit way that you want them? Sometimes you want them in terms like the process, in terms of like a specific item. So that is really what management accounting is, and how it's a bit different from financial accounting. Financial accounting is just more of like what is it? What is in what all this change if I maybe spent more or less. So basically, you might be having like a bill of, I don't know, 2K, but then you're wondering, out of this 2K, how much does sugar cost or something? I hope that makes sense in a way. Now, in terms of, so why you'd want to know that is because you want to know how to allocate costs. Like, you don't just want to produce things, or okay, I think as lawyers we're not going to be manufacturing, but assuming this is like a lot more, say if you're manufacturing, you don't want to just know that you're making money and you're bringing in this number of clients, and maybe you're like spending this much on maybe meetings or entertainment for your clients. You also want to know, for instance, what type of clients pay me, what type of expenses do I spend more in meetings, do I spend more on this type of files in terms of the actual physical files. So that is how I'd really try to think of it in terms of like accounting. Oh, sorry, I can see there are people waiting. Let me just let them in, then you can continue. Then, so that is how I'd look at like cost accounting, and why, even as you're thinking about like reasons to give, think of it that way. You want to know what part of the quote process is more expensive. Is it when I'm onboarding my clients? Is it the initial discussions? Is it at the appeal level? If you were to like actually apply management accounting like that, that is what it would seek to do. Or you want to know which type of clients am I making money on, and this might help you know which type of clients to focus on. That is how I'd think of it in terms of accounting. But now when you think about it in terms of just the slides I'm going through, a lot of it is on manufacturing, which of course will not be very relevant if you're in this business as a lawyer. but you can look at them since it's like part of the notes you're looking at. So basically with the management accounting, we then classify different kinds of costs. And one of the examples here is manufacturing and non-manufacturing costs. Now, if you look at manufacturing costs, now there's something we call direct costs. I think we'll come to it. But normally, let me also just like use an example of like a house still. You could be paying rent, then you could be buying food. Then you have like really fixed costs. Like rent, it doesn't matter whether you eat once a week or once a day or twice a day, your rent is constant. Maybe the cost of your furniture is constant. Okay, furniture is a bad example because of depreciation, but say your rent is constant, or say maybe you clean your house twice or thrice or 4 times a week, irrespective of whether it's dirty or not. That is a standard cost. Then we have, so those are like fixed costs. Then we have other costs that now we call direct costs, and these are costs that will really change based on like the unit. A good example is like food, or to some extent electricity in your house. The more people there are in your house, the more electricity you might incur, the more food you might like have to buy or something. So that is how I'd think of like direct cost, then indirect cost. Now coming back to this example here, manufacturing and non-manufacturing, the two main things that drive manufacturing is your raw materials and labor. What do you need to make? What material do you need and what labor do you need? So that is like the direct labor cost. Then we have direct manufacturing overhead. Would I still produce what I want to produce? Or if I didn't produce whatever I want to produce, would I still incur these costs? If the answer is yes, then you know that then that is an overhead. So for instance, like the example we have here is paint for furniture. Whether you paint your furniture or whether you don't, it doesn't increase the number of, I don't know, the number of things you manufacture, assuming you're manufacturing. Okay, I don't know what you're manufacturing. Let's say cups, for instance. So assuming you're manufacturing cups, it doesn't matter whether you paint your furniture or not. Or rather, even if you paint your furniture, it won't affect your actual business. So basically, they're like indirect and they're just overheads. Now, if we go to non-manufacturing costs, so non-manufacturing costs are like, so you need to produce something, but then you still need to sell the thing. So these are all those other costs. It's like, think about, let me also just put it in terms of accounting still, of legal work still, then it might make a lot of sense. So you might have the cost of your like your files, you might have like the cost of buying laptops for your employees or even seats in the office, but you have these all these other costs that have nothing to do with your direct client. So maybe it's a cost maybe you meet up with a few people in order to get information that may then help you figure out a new client, or you want to entertain a client so that business comes your way. That'd be like your marketing cost, though ideally lawyers are not meant to be marketing. Then you have admin costs. So these could be like things like the accountant that you're going to hire after you pass this paper and you don't need to think about accounting again. So that would be like an admin cost, or the cost of cleaning the office or stuff like that. Then, so that is one way of looking at it. So the next, all these costs, what you'll realize is the same type of cost can be called something else. So these are just like the various categories. So we're going to talk about the same things over and over. So if we look at fixed costs, is like the rent and those ones that won't change with the increase in the number of units. So an increase in the number of clients you have will not increase your rent. So rent is a fixed cost. Maybe something like the number of people you need in your office will increase as you get more clients. That is a variable cost. Then we have semi-variable costs that will have a will change a bit, like the rent. Your office space might increase with the number of clients if the number of employees you have increases. So it's not really fixed, but it increases in a way, but it's not like very linear, or you could have like electricity cost might not increase much, but in the end, if you have more people, then your electricity cost might increase. It's not that like if you add one more person, then the unit of your electricity in an office will change. But maybe if you add like 20 people, then it will change. So it's like semi-variable in short. So the third categorization is like period cost and product cost. So if you look at product cost, it's like if you look at product cost is the cost of like of purchasing a product or like manufacturing them. But if we look at like period cost, they're like you're looking at it in terms of in 3 months I will have spent this. Just a sec. Oh, okay. Let me just admit someone. You look at it in terms of like in 3 months I will have spent this, in 2 months I will have spent this. So we're looking at the same cost, but maybe someone wants to know, maybe you're thinking about getting a loan from the bank, or a client just paid you and you don't know when the next client is gonna come. So you're like, what will my cost up to June be? How long can I survive? So you might then be looking at your cost in terms of period. But then if you're looking at product cost, you'd be like, should I do criminal law cases, or should I do civil cases, or should I do conveyancing? So you're looking at it in terms of like product. So it can be the same cost, but then just categorized differently. Then direct and indirect, we've talked about these a bit. Then controllable and uncontrollable costs. These are the costs like you have control on and like predict. Okay, so basically an example would be you don't have like control on paying stamp duty, but you have control on how much salary you can pay your employees. So you might also want to like classify your costs like that. Then another way of classifying your costs is predetermined or historical cost. So sometimes, like by the time you're going into it, you know, I'm gonna hire interns and I'm gonna pay them like they do 10K. I'm gonna pay them whatever amount. So that is like a predetermined cost. Historical cost. Okay, I don't know if I agree with that definition of historical cost, but let's go with it. So basically here they say that historical costs are costs that you can ascertain only after they've been incurred. Okay, we can go with that, but I don't know. Then now the next classification of cost is like according to like planning or control. So here we have like different types of costs, like budgeted cost and standard cost. Budgeted costs are the costs maybe once in a year you want to like come up with a budgeted cost so that things don't shock you, so that maybe you know how to then go ahead in terms of like how many clients to get, when to have sleepless nights or not in terms of like cost. Then standard cost, you can also decide that you're going to categorize your course so that you have like you can, let's use now still an example of like maybe your law firm, like costs that can be translated into the actual business, where you look at all your costs, you look at, and this is part of what we'll be doing in the numbers, you look at all these things and you say, I'd like to know how much it costs me to serve one client in the actual operation. So it's really going granular and trying to really come up with the cost in a way that it can be actualized in your actual operations by going granular and predetermining the cost. Then now these ones, I think this part, I can just explain. I've seen that asked a lot, especially in accounting, and it can be very confusing. So in terms of other costs, opportunity cost is where, so an opportunity cost is where the cost you incur by not being able to pursue one opportunity against the other. So say maybe you're only one person in your law firm and you can't serve more than 3. You can't serve 2 clients. You can only dedicate your 1 month or 1 week to one client. So if you take client A, you have to lose client B. So ideally, you'd call client B, the value of client B's work, opportunity cost, because it's really what you've lost as a result of choosing option A over option B. I hope that makes sense. Then we have differential cost. So differential cost, still let's look at client A and client B still. differential cost means maybe client B is based in Mombasa, client A is based in Nairobi. So basically, it's the difference in the type of cost you will incur if you go with option 1 or 2. You might have two conveyancing clients. One is in Turkana, one is in Mombasa. So if you're going to Mombasa, probably you'll have to like say, I'm gonna need to stay somewhere, I'm gonna drive for this number of hours. Whereas if I have a client in Nairobi, I'm not gonna have these costs. So it's really what is the differences in the types of costs that you'd incur in one and not the other. Then sunk cost, and this is sunk cost is cost that you've already incurred. And should this like come in an exam question, really when you're trying to review new opportunities, then you can then do away with like sunk costs. Does that make sense? Like in terms of if you've already incurred a cost, you then can't use it to make a decision about two opportunities. But I haven't seen questions like that. But again, I haven't been a very diligent student in terms of LPM. But if it comes, basically sunk cost is what you've already incurred and it won't affect your decision. And if you see a sunk cost, then it shouldn't be used to then determine your costing. So I don't know if there's any question before I move to the second part, then we'll move into the calculations. Assume that there's none, so I will then move to cost estimation, which we have mixed cost. Mixed cost is fixed plus variable. We have talked about this. So a lot of this is really standard costing is measuring performance either in terms of period, in terms of product, in terms of materials, in terms of labor. A lot of what you're going to be doing is really based on that. Then activity-based costing is like just like trying to figure out. So basically, you can have different, so maybe you might want to see how much does it cost me to do production, how much does it cost me to do marketing, how much does it cost me to file. So basically the different activities and costing for them. So in terms of, then we have cost accounting. So cost accounting is just basically the whole process of figuring out what the cost of manufacturing or products or specific or like performing specific functions are in terms of basically, so there's so many different ways of looking at it. So how do then I determine this? There are two ways. There is job costing and there's process costing. Job costing is per unit. What will this cost me? What will one client cost me in terms of cost? Process is now in terms of like the whole, I feel like there's a repetition, like the whole process of how much does it cost me from like getting a new client, onboarding them, going to court, closing the file, appeals, or etc. etc. So it's more like of the process than on the cost. So that is the long and short of it. Because of this formula here, if you want to get a rate, so a lot of this part will be like more on rate. So if you have your overall, if you want to know like how much does it cost me on average for this process, you ask yourself. So maybe you want to know how much it costs you per client that you serve. You could take the total cost divided by the number of clients. So it's always the total divided by the number of units that you're dealing with. But then again, I recognize that these formulas do not show, they're not like put in a way, like in a legal way. So it's more of manufacturing. So we look at them like that. So process costing systems. So if we look at the similarities, and so this one, allow me to skip this because I can also see in terms of time, it's a repetition really, unless someone has like a specific question. I can skip that so that we go into the workings, but ideally that part is more of the theory than the concepts that you're going to work on. Then if we look at budgeting, there are different aspects of budgeting and limitations. Those ones you can actually just like now look at on your own. I think maybe I can comment on what this means so that even as you look at them, then they make sense. Techniques for making budgets more effective. Continuous budgets, meaning you need to do your budget so that they're realistic, maybe like to take into account changes in the prices of things. Maybe if like the cost of fuel increase, then that has to be like reflected in your budget. Participative budgets, everyone has to be there. Zero-based budget basically means every year or every so often within a period you start from zero and start all over again. Activity-based budgeting is now what we've been talking about in terms of what does it cost me at this like level of activity to the next level. It's a lot like the process, but just like in a different way. So we'll start here because it will also take us to like the next part. It will just be now a build up of like the concepts as we move along. So I will start with here. So if you're looking at budgets, they're like going to be like different types of budgets. So maybe in a question you're asked, prepare a sales budget. Now, the easiest way, if you don't want to be confused, deal with products differently. Do not combine them because, and maybe just practice before so that you're not very confused in the exam, so that you have product A and B. And the reason is most of the times, the next part of the question will require you to come back to this part. So if you combined units to like 120 and done your calculations on your calculator, then you're bound to get confused at some point. So keep product lines separate. And also remember, we're also going to be dealing with like activity-based and like product-based. So you want to be able to get both. So now this question is asking us to prepare a sales budget for ABC Company Limited. If we look at ABC, now we have products A and B. I'd rather you put product A and B. Think of it as making a P&L for product, an income statement for product A and one for product B. That way you can go all the way up to the end. So it makes sense to then organize your work that way. So here we're being given product A and B, and as you can see here now, A and B have been put this way. Then remember to have your totals so that you can save time when you just need to work with the totals later. Then we are being told the selling price for price A is 20. For product A is 20, product B is 10. Makes sense? So basically a sales budget is to show the sales number. How do you get the sales number? Units plus price. So it's just a multiplication of the two. So for product A, the sales will be 2,000. For product B, the sales will be 200,000, and therefore you have 2.2. Always ask yourself, what is the variable? What is the formula? And I think you can master them, but you can also just think of them logically. Now, then the next part will be, I think if there's any question, just interrupt me. So the next part is now looking at the production budget. So how do you come up with a production budget? Before we even go into the formula, it's like really simple. You ask yourself, how much do I need? I need 2,200 units, or for product A, I need, here we're looking at production. So production is number of units. So for product A, I need 100,000 units. For product B, I need 20,000 units. So how much do I really need to produce? You only get to this by asking yourself, what do I need and what do I already have? So that you only produce what you need. Then sometimes most companies and most questions will say you can't go below this number of units, just in case you have like customers coming in last minute. So you also have to add your desired in the end. So you say, I need 100. At the end of the day, we can't go below 50,000. So in essence, I need 150,000. But what do I have right now? I have 10,000. So it's 150,000 minus 10,000. So I need 140,000 to be produced. Does that make sense? Okay. Let's do this question, then you let me know if it makes sense or no. You stop me if it doesn't. So this question is asking us to, okay, I guess the essence of this question is asking us, how many units do you need to produce? Remember, most of these questions go back from the beginning. So we need 100,000, we need 2,000, we need to, in the end, have 20,000 for A and 200 for B. So we have 120, we have 2,200. In the beginning, we only had 1,000, so we have to produce 119. In the beginning, we only had 100, so we need to produce 2,100. Does that make sense? Or rather, okay. Yes, please ask the question, then I will be able to. Or which part? Is it the whole thing? Do I need?
Just
Yes.
I'm just answering that question. The way you have, I don't know the rationale of it all.
Oh, like I repeat the rationale.
Yeah, why are we adding some, lessing some?
Okay. Let me go again. So why? Okay. So first, most companies have like a minimum balance so that you don't totally run out of items. So they say at any given point, we need to have this number of units. The reason for that is so that if you get an impromptu customer, then you're able to serve them. Now, then you have what you have to sell, which we have as 100,000. Let's work with A for a moment. You have 100,000. Then maybe the policy, the ending value has to be 20,000. So after you sell the 100,000, you still need to retain the 20,000. So assuming you didn't have anything in the beginning, you'd need to produce 120,000 so that when you sell the 100, you're able to remain with the 20,000. Does it make sense up to there?
Yes.
Yes, then, but most of the time we are not starting from zero because the policy says, or because we already have some units we had produced. So if you were to work with it as is, then we'd overproduce. So instead of doing 120, we are saying we already have 1,000. So we don't need to look at that. We don't need to like add that. Think of it this way. If KSL says you have to have, I don't know, 10 people in your group and you already have, okay, that's such a bad example. So let me think of another example. So assuming you're going somewhere in someone's car and they say, when you come back, we can only have 5 people, and you have, I don't know, and you have 7 people in the beginning and you need to be 10 people going. So you add 3, then you minus the number. Okay, that is also a bad example. Let's stick to this example. I hope it makes sense though. Like you already have this, so you don't have to produce it, the 1,000. So you already have 1,000 of the 120. So what do you need to produce? Just the 119. Is it better?
Yes, thank you.
Okay. So we're going to move still based on that budget. So we'll keep the numbers moving. So so now this part is asking you, so it gives you a whole number of things. And this is also now the importance of putting A and B. So it tells you, sorry. So it tells you, I think here I might just use Excel a bit so that it's easier. Let me know if you can still see both my screens well or if it's too tiny. Can you see my screen well? Okay, I'm assuming you can. So here, we are going a bit granular. So we know, so let's start with A, product B. Then we now have the number of units that we are to work on. So we have 119,000. These numbers. Okay, then we have 2,100. Makes sense. So now we're being told per unit, we need 10 kg of material X and 10 kg of material Y and 7 kg. Let's start with A. I like doing them just like, let's start with A, then we go to B. So when we're doing A, we'll say we need, to do A, we need 10 kg of, so let's do X and let's do Y. I think the best way is to like practice how you're gonna organize your work early enough, then that way it's not so confusing in exams. So okay, let me just remove the kg here so that we can use the formulas. Kg. So we have 10 and 7. So basically this question is asking you, figure out how much material you need for the direct labor. How much will you need to produce A? Remember, and this is per unit of A. So whatever answer you get has to be by the number of units of A, which is 119,000. So in order to produce A, you need 119. So here we will have the total units. Just allow me to just extend it a bit so that you can see numbers without using without doing that. Okay. So we have the number of units here. The number of units is still the same. So in order to produce this, we need 1.19 m of x and 1.19 of y. I don't know how that comes. I will check the answer later. So the question is asking us, find the direct material purchase budget. So we already know how many units, total units, because now we know how much we need to then you need to we need to produce. Just arrange your work well so that even if you miss marks at like in part A, then you're able to get marks in part B by just like showing why. Then in order to then complete it, we need to get the price. Remember, budget is cost plus price plus, okay, let's call it cost. Price is mostly used when it's sales. So we have total. So the cost, we are being told material X is 4 shillings per kg. Material Y is 10 shillings per kg. So to get the total material cost of X, we do 119 times 4. Of Y, we do 33 times 10. Let me pause there. Does that make sense as I check if that is the correct answer? Does that make sense up to that point? Okay, see what to, any question? Okay, so let's work with, so that is A. Then we do the same thing for B. Do the same thing. We'll get to it. We'll repeat one of the principles we've had. So for B, we don't need that number of units. We just need 2,100 units. So we need 2,100 units. So what is the total units of these that we need? I still like separating them in case the question changes. So that is why I'm not adding X together and Y together, but you can do it that way. But I like presenting it like this in case the questions change. Then same thing. So we start how many, what is, so basically think of it like this. Let me see what has like, I can think of it in terms of, say, ice cream. You're being told you need, ice cream is made of two components, X and Y. And the ratio is for X, you need per 1 unit of ice cream, 1 liter of ice cream, you need 10 of X, and maybe this is milk and sugar, and 7 of Y. So how much do you need in total? So you need to find the total number of units. So this is like the price per unit. I really hope I'm not confusing you guys. If I am, just stop me now. Then this is the total units just based on the calculation we had done above. Then once we have that, total units of materials. So we have units, but then we also have units of materials, and we have total units of materials. Then once we have that, you need to know the total. So the total here is 84. The total here is 147. Now remember again, always just like check the information you are given. So remember we already have inventory of X and Y. X and Y, it means that, and like what I did, we have, we need to get the total of X and we need to get the total of Y. So in order to get the total of X, so in order to get the total of X, and it's because we already have beginning and ending inventory in terms of X and Y. So we have, that is what we have. Does it make sense to everyone before I move to the next step? Okay. Who is struggling with the concept a bit? As I also check if my, let me see. Okay, so, okay, let me go back to how it's been done here. So I have done it a bit differently, as I can see how they've done it, but just give me a moment to continue with like the way I had done it, then we'll go back to this and see. So if we look at this question, we have beginning inventory and we have end inventory. So it's just like the other concept. What do we need? We need 487, this one. What do we have? Oh, I see. Worry not. So what do we need? So what this question has done, it's fine. Please ignore the costing here. We'll do it in the end. It's fine. We will do it in the end. So let's assume we just have the units, which we got from the previous question. Then we have the units, the rate per unit. Then we have the total units. So the beginning, the desired unit is 119. And the desired unit is 1.19 for A, and for B it's 21. I've added the two. I've ended up with that. That becomes our X. Our Y becomes how many units do we need based on the number? We need 833 for A, and for B we need 14.7. So we have 847. So this is what we require. But then remember, we already have some. So beginning, then we already have what the desired level is. Okay, let's start with desired level. And here we are being told for X, at the end of it, we still need to have 8,000. At the end of it, we still have to get 2,000 here. Then what we have in the beginning is 10,000. And here is still 10,000. So what is happening is, how much do we require in terms of material? We need 1 plus what is desired minus what we have. So we need 1249 and we need 837. Let's see if that is what we have. Here we have 853. Why do we have 853? The number is wrong under Y. Why do we have this? 721. I don't know why. Let me see where I could have gone wrong. Oh, I see. So for product B, we need 10 kg and 9 kg. There you go. So now it is correct. I need to actually stop there and pause just in case someone is struggling a bit. Is everyone following? So that we don't move to the next one if someone is stuck. Let me know if or if you're not following. Hey people.
Hi.
Yes.
Just to ask, where did you get the required 101 million, 1.211 million, and the 851? Where did you
This
get
one.
those total?
This one.
No, not
Now,
that one. Chini, when the required and the before you subtract
one?
subtract the desired.
Okay,
Yes,
so
that one.
okay, so what I did here, let me start from here. Let me just break it down here. So we have X for, let's start with X for A, X for A and B. So it's a total of what we need for A and B. So we have A and B there, and we have X and Y. So if we look at this, we have this X here, and the total here is, the total X for A is 119. So that is what I had, the 119. Then for B, the total for X is 21. So that is where I got the 21. Then if we do the total, let me just do the total here because of space. If we do the total, you can see, but okay, wait a bit, 8, 9, and 19. Is it different? Just give me a moment. H3, H9. Oh, I see. Oh, I picked the wrong number. Okay, there. It makes sense.
Yeah. Thank you.
Okay, so the same thing for B as well. Let me just delete it so that we don't have like the unnecessary. Any other question? Okay, so now once we have this, so we have the number of units, but remember this budget asked us, so always go back to the question before you move to the next one. It asks us for the budget, not the units. So what I done initially was like to go straight and multiply by the units, but the approach is different. As long as you get to the answer, it's okay. So we have X at 4 shillings and we have Y at 10 shillings. So we have this. So basically we're going to take the total of X times, let me just call it price per unit, price per cost per material, cost per material. A bit. Yes, so cost per material. So cost for X is 4, cost for Y is 10. Then this is the units, that budgeted units. Yeah, let's call it budgeted. Or then always label your work just so that you get those extra points. If you just use numbers, then especially when you're not there to clarify them. Yes. Then let us now move closer to the answer, which I hope is that one. Let us see. There, so that is it. Is it? Yes, that is the answer on the budgeted. So the next question is on, so that is how you do that. So we also need to do that for the labor. And this is the advantage of labeling your work. So for the labor, we just need to go and multiply the number of units by the number of units required, like the price per hour. The price per hour is 20, so we need to, it's 5, so we need to, okay, we need to now do it. So a good starting point will be, we go back to that number we had, the number of units required. So always label them. So we're going to start again. Doing it here. So here we are doing labor. I hope you're following. I won't. Oh, sorry. I think we forgot to record. Oh, someone recorded. Thank you. So we have the number of units. So how many units do we require? So let's call it labor. We need labor of 20 hours. We need labor of 25 hours. 25. So what is the total hours needed? Total hours, we multiply the 2. I think then some people like calculating, doing all these formulas, then you start calculating at once. That doesn't work for most people because you end up getting confused. So you might want to just do it like step by step. Even if the answer is wrong, but you're not gonna get mixed up, then you might also forget like what you're calculating at some point. So it's easier to do it step by step. So we have the total hours, but our question is the budget. Then we'll just go to cost per hour. Then I think before you start calculating in the smaller calculations, just put your formula somewhere, then you won't forget. But if you also start calculating, you might forget your formula. Okay, I don't know if I'm contradicting myself now here, but I hope it makes sense. Put your formula, put the numbers, then complete the calculation per area before you move on to the next. So if we do this, let's see if the total makes sense. The total is that plus that. 12 million. Let us see. 12,162,000. So does that make sense? Let me see if the next question is different. So that is the total hour labor rate. So this other one, oh, I liked this question because let me do this, at least this question, the cash budget, though we might not do it in full. There's something I liked about it, the quarters. that might be useful. Where is it starting? Okay, so we are going to move to what I hope is the last part, which is the cash budget. Any question before I delete this one? Okay, let me just open a new one. We'll go back to the Excel. So let me go through this. So the cash budget is, so it's one thing to know how much something is gonna cost, but for some people you need to know when exactly you need that money in terms of like planning, whether you need to borrow, like to take out a loan, or you need to like ask a client to pay. You always like need to know. So that is where the cash budget comes in. So the cash budget is like, what do you have, what do you expect to have, and what is your end balance like. So here we're given data which gives you like what we have in the current year, Q4, what we expect in the new year. Yes. Oh, I thought someone was asking a question. So, and what you will expect the year after that. So if we look at this, we have like the sales unit per, so we are saying in year one we expect 1800, then all those numbers as they are there. Then, so the first thing is to like prepare a sales budget, which basically is to prepare, remember sales budget, we said it's the price times the units. So it's basically to multiply the 200 by the sales unit, but then we'll put it in an organized way. And we are doing this per quarter. Okay, so I can see here the approach is per quarter. If it was an exam, if they were not very clear that it's per quarter, I'll just do it all the way up to the year after where I have the information. But here they just want it per quarter, which is the sales unit times the sales price, and you get to that price. Then the next part, they ask you for the production budget, which basically is the cost of the direct materials and the cost of labor. Oh, okay, no. So the production budget, oh, okay, sorry, no, the production budget is the production of units. So basically we are saying we need 1,000, 2,000, 1,500, but then we have the desired end, and the desired end, where's that information? Beginning inventory of finished goods of each quarter must be equal to the 10% of the sales of the previous quarter. Now, if we look at this, so if you're told beginning inventory for each quarter, then it means then that would be your desired. I hope that makes sense. So like if in Q4, then it means by beginning of Q1, then you need 10% of 1,800, which would be 180. Then as you can see here, then for Q1, for Q2, it will be 10% of 1,000, which is 100. For Q3, it will be 10% of 2,000, which is 200. Q4, 150. Now let's go to the number. If we look at it now, just give me a moment to expand it a bit. So we look at it in terms of desired units. So desired unit is like what we need to have at the beginning. So we are saying out of the 1,000 that we are to sell, we also have to maintain 100 in order to meet the desired unit. Then remember, we also have the beginning unit, which you are told is 10% of the previous quarter, and 10% of Q4 is 180. So that is why it's like the beginning. So it's the same concept, only that unlike the other question, you're not given like numbers on the face of it. So you need to add like 1,000 plus 100 minus 180. Then you get all that number. I hope that makes sense. Is anyone confused, or does anyone want me to repeat an aspect? Okay. So the next question then, now we have the number of units that need to be produced, and the question is asking us to get the raw material purchase budget. Now, so the numbers we have up there is what we'll need, which is 920, 2,100, 2050. Then, so we need to know in terms of materials, how much do we need per unit, and we are told we need 2, and it's at the cost of 5 shillings. So whatever units we need, whatever units projected budget we have on sales, we need to multiply that by the unit. So we need to multiply that by 2. Okay, sorry. Okay, where is it? This is like a repetition of the question we had. It's just a bit more complex in terms of like requiring you to calculate some aspects. Basically everything in terms of like our ending inventory. Let's go back to the question. Raw material inventory at the end of any quarter must be equal to the requirements to produce. I think with each question, just read the additional information again to see if you need that information. So raw material inventory at the end of any quarter must be equal to the requirements to produce units for sale in the next quarter. So basically, if we were to look at this, is where are we? So we were at 920 times 2, so we have 1840, we have 42, we have 29, and we have 41. Then if we look at the ending inventory per quarter, we're saying it should be equal to produce the units per quarter, and this takes us back to the sales information. So the sales unit was 2,000, so we need 4,000, 1,500, 3,000, 2,000, 2,000, 2,000, 2,000. So that is how come we have that. So we have to like add that. Then we have to add inventory at the beginning of the quarter. Where do we get inventory at the beginning of the quarter? I think we had already calculated inventory at the beginning of the quarter, which is like, let's see. Let me see if there's any information on inventory at the beginning of the quarter. So we have information on end of the quarter. Just give me a moment. Where do we get inventory at the beginning of the quarter? 2,000. So it seems that what has happened here is they're assuming inventory at the beginning of the quarter is the inventory of the units, just looking at like what we have here, because if you look at the 2,000, 4,000, 3,000, and basically this is twice this, because remember we need like 2 kgs per unit. So that is what they've done. Then remember you put what you require plus what you need at the end minus what you have in the beginning. So then the difference is the unit that requires to be purchased. Then you multiply it by the unit per cost. So you multiply that by that and you get to the 19,200 and the rest. Any question on that before we move to labor? Okay, I hope you guys are still there. Okay, so we'll move to labor. Labor is the same thing. You need to figure out the units to be produced, which you already have from our previous calculations, and we know that we need 3 hours per unit, and we know that the cost of labor is 10. So you just do it systematically. Units to be produced, number of hours per unit times cost per unit, which brings us here. Then the last, okay, not the last one, then they're also asking us for like the manufacturing overhead. What is the manufacturing overhead? Basically, when you hear overhead, it's just like, oh, this one is added like, so you will first do the variable and remember, so in most of these questions, like the previous question leads you to the next question. So we have the labor cost, which you already have here, which is picked from there. Then you go back to your question. Again, like we said, with each question, you go here. In addition, variable manufacturing overhead is based on direct labor cost times at the rate of 80%. So we have the labor cost times 80%. Then we are being told, in addition, fixed manufacturing overhead of 20,000 will be incurred in each quarter, including depreciation of 2,000 per quarter. Now, when we come to this, we start with labor cost because we've been told budgeted variable overhead is 80% of labor cost plus budgeted cost, fixed cost of 20. So we've done 80%, then we've added the 20% to bring us here. I hope that is okay. Then that is how we get that answer. Any questions? Just one more, then we'll be done. Is it one more? Looks like one more. Any questions so far? So I will move to then the last, what I hope is the last question, where we are being told to prepare a projected income statement. Now, with income statement, so now it's all the information you need, and you'll still like look at it per. You start with sales and variable cost, then you look at fixed cost, then you look at any other cost. So basically keep your numbers in order, tabulated, then it will come down to this. Remember what we said that you need to arrange your work in a P&L format. So variable cost, you already had the number here, which is 64. Then fixed cost, you already had 20. Then selling and admin, why are we getting this selling and admin of 96? Let's see. We always, so one of the things I should have done is look at the information here. So we're saying, in addition to manufacturing, selling and admin cost of 32 are incurred per month. So remember, quarters will be 3 months, so multiply by 3. Actually, so it will just be 32 times 3 will give you the 96. Then you will look at all these other information. It doesn't seem relevant as at now. Now, we also need a cash budget. Unlike an income statement, a cash budget is more of the cash, like the cash flow, which like the other guys had covered, but we can answer the question. So if we look at cash sales, let's go back to this. Sales are made at 30% of cash and 70% credit. So basically, in any quarter, credit sales are collectible in the quarter following the quarter, and 2% are considered non-collectible. So if you have sales, let's look at quarter one. If you have sales of 200,000, what you're being told is only 30% of that will be your cash. So 30% of 200K, 60K. So you'll have 60K, then 70K is credit. So 70 times 200, that is 140K. So we're being told, so these credit sales will go into the next quarter. So you have to, for each quarter, you have to put what's there in that quarter, what's the cash sale, and what is to be collected from credit sale. Once you have that, then you can put it in the correct quarter. I hope I'm making sense. Are we still together?
If I may,
Yes.
it relates to the area. Where did you get the credit sales from?
Okay. So so it's from the notes. So what I was saying before every question, we have to look at the notes, the additional information. So now like here, we are being told sales are made 30% cash, while 70% are credit. Then of the credit sales, it's collected in the next quarter. So as much as you have like sales of 200K, 30% of 200K is 60. So you will have a line for cash sales and you'll have a line for credit sales. Then there's this line here saying 2% of sales are uncollectible. If you don't adjust for them under credit sales, normally you will go down somewhere, I think, and you will find something about something about bad debt. Let me see if they might have put it in like another working. Okay, let me take that back because it's the workings are not here, but because it's a cash budget and not an income statement, you can actually now do 98% of 70% of 200. Has that answered your question?
Yes.
Okay. Guys, teaching is, I didn't realize lecturers get tired, but it's the last question. So let's see. So we have opening. So basically, you won't classify everything in the same quarter. You have to, but basically, you have to like spread it out using the information that we've been given. Then raw materials are paid for in the month of purchase. So we'll come to raw materials. So I think the best way to do this is to have all your lines, then go back to reading the note, like arrange them, then go back to reading the note by checking through like you're working. So raw materials, you match them to the correct quarter. Then let's go to the next one. Wages are paid for in the month in card. So wages also, you will come and pay for them in the month in card. Then equipment worth 38,000 was bought in quarter 4 of the coming year. So you will have a line for equipment and you will have it in quarter 4 only. Sales and admin, if it's silent, you put it there. Then we had a line. So okay, so basically we had a line appear on depreciation that we didn't use it. Fixed overhead of 20 was incurred, including depreciation of 2. I think if you're like doing this in an exam setting, just like cross out something after you have worked on it totally, so that you can always go back to your numbers before you close the question. So now, like here, that overhead less depreciation is what we have here, which before they were just asking about overhead, but now we have removed the depreciation. Then, so now we have the sales, we have the total disbursement, we have the cash balance, and we have, there's a last line here. The company requires a minimum cash balance of 25, and the cash balance as at first quarter is expected to be 27. Sorry, let me just read that again. And the cash balance at the beginning of quarter 1 is expected to be 27,000. Now, in terms of this, so you add, once you have these, you will have your cash balance and you will have your minimum cash balance. So with the cash budget, you want to see what is surplus and what is not. If you look at what is surplus, if you need a minimum requirement, then that will not be your surplus. It will be part of like your cost in quotes. So that is why we have the 25 there. Then the last one, which I haven't seen here, is the cash balance at the beginning of quarter 1 is expected to be 27. Now, we need to have the opening cash balance. So we start with the opening balance, we put the cash, we put the expenses, what they're calling the disbursements here. Then we have the minimum balance, then we have the deficit. Then whatever is surplus, we then like carry it forward here. So we start with, okay, then in the next quarter, we start with the cash balance. Just think of it like everything else, brought forward, carried forward. So you will see a movement there, so that each quarter is starting with the closing for the previous quarter. Makes sense? Does it make sense, people? Does it make sense? Okay, I'm assuming it makes sense. Any questions? Okay, so if there's none, then I think we can end there. I don't know how I'll save this recording for you guys. I'll just talk to Linda and see how it can be saved, but I hope it made sense to you guys. And If there's no other question, then I think have a great evening ahead. Okay, bye.
Thank you, Wendy.
Bye. Thank you, Wendy.
I'll
Okay,
share
bye.
the recording.
Okay, thanks.
Thank you, Andy.
Okay, thanks and bye.